Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting, Chapter 10, Unit 3, that is, Issue of Debentures. Let us begin. We'll start our discussion with issue of debentures as collateral security. Collateral security in the sense additional security. So collateral security means secondary security, additional security or supporting security for a loan which can be realized by the lender in the event of the original loan not being repaid on the due date. Under this arrangement, the borrower agrees that a particular asset or a group of assets will be realized and the proceeds therefrom will be applied to repay the loan in the event that the amount due cannot be paid. Sometimes companies issue their own debentures as collateral security for a loan or fluctuating overdraft. When the loan is repaid on the due date, these debentures are at once released with the main security. In case the company cannot repay its loan, the interest thereon on the due date, the lender becomes the debenture holders, who can exercise all the rights of a debenture holder. The holder of such debenture is entitled to interest on the amount of loan, but not on the debentures. Accounting entries. There are two methods of showing these type of debentures in the books of the company. Method 1. Under this method, no entry is made in the books of account of the company at the time of making issue of such debentures. In the notes to accounts of balance sheet, the fact of debenture being issued and outstanding is shown by note under the liability secured. Illustration 8. X Limited obtains a loan from IDBI of rupee 1 crore, gives as collateral security of rupees 1.5 crore of 10 each. 14% first mortgage debenture. Solution. In the notes to accounts, in the notes to accounts of balance sheet of X Limited, it is shown as follows. Notes to accounts of X Limited as at includes long-term borrowing, long-term borrowings, secured loan, secured loan 1 crore, IDBI loan, that is collaterally secured by issue of rupee 1.5 crore, 14% first mortgage debenture. mortgage debenture. I believe you understood. Method 2. Method 2. Under this method, the following entry is made. The following entry is made to to record the issue of such debentures. Issue of such debentures. Debenture suspense account. Debenture suspense account. 2% debenture account. 2% debentures account being the issue of debenture being the issue of debentures collaterally. The debenture suspense account will appear on the assets side of the balance sheet under other non-current assets and debentures on the liability side of the balance sheet when the loan is repaid. The entry is reversed. The entry is reversed in order to cancel it. In order to cancel it. Let us move ahead. Illustration 9. Taking the same information of illustration 8, the entry on issue will be as follows. In the books of X Limited, debenture suspense account debit 15 lakhs into rupee 10 as collateral security to 14% mortgage debenture. Balance sheet of X Limited as at the extracts of balance sheet, equities and liabilities, non-current liability, long-term borrowings 2 crore 50 lakhs, assets, non-current assets, other non-current asset 1 crore 50 lakh, current asset cash and cash equivalent 1 crore, total 2 crore 50 lakhs. Notes to accounts. In long-term borrowings we have IDBI loan 14%, mortgage debentures 1 crore, 1.5 crore, total 2 crore 50 lakh. Other non-current assets, debenture, suspense account, 1 crore 50 lakh. Students should note that the method 1 is much more logical form, the accounting point of view. Therefore, it is advised to follow method 1. Next is issue of debentures in consideration other than cash. Just like shares, the debentures can also be issued for consideration other than cash, such as for purchase of land, machinery, etc. In this case, the following entries is passed. Sundry assets account, debit, sundry liabilities account credit to vendors account, and vendors account debit to debentures account. Further, it should be noted that these debentures can be issued at par or premium or at a discount. In each case, the second entry for issue of debentures would be done accordingly. Number of debentures to be issued is calculated as follows. First, when debentures are issued at par, number of shares equal to purchase consideration divided by par value. When debentures are issued at premium, number of shares equal to purchase consideration divided by par value plus premium. Purchase consideration divided by par value plus premium. And next, when debentures are issued at discount, so purchase consideration divided by par value minus discount. Illustration 10. X Company Limited issued 10,000 14% debenture of nominal value of 50 lakhs as follows. The sundry persons for cash at 90% of the nominal value 25 lakhs. B. To a vendor for purchase of fixed assets worth 10 lakh, 12 lakh 50,000 is the nominal value. To the banker as collateral security for a loan 10 lakhs, 12 lakh 50,000 is the nominal value. Journalize. Pass necessary journal entries. Solution. In the books of X Company Limited, journal entries. In the books of X Company Limited, journal entries. Date, particulars, debit, credit. Case A. Bank account debit to debenture application account being the application money received on 5,000 debentures at rupee 450 each. So 5,000 to 450, 22 lakhs 50,000. Next entry. debenture application debit, discount on issue of debenture debit to 14% debentures, debenture application 22,50,000, discount on issue of debenture 2,50,000, and to 14% debentures 25 lakhs. I believe you understood this. Let us move ahead. Case B. Case B is to a vendor for purchase of fixed assets worth 10 lakhs. So fixed asset account debit 10 lakhs to vendor account 10 lakhs. Fixed assets account debit 10 lakhs to vendor account 10 lakhs. Next entry, vendor account debit 10 lakhs to 14% debentures 12,50,000. 2,50,000 is discount on issue of debentures debit, being the issue of debentures rupee 12,50,000 to vendor to satisfy his claim. I believe you understood. Case C, third case. To a banker, collateral security for a loan of 10 lakhs. Case C, bank account debit 10 lakhs to bank loan 10 lakhs. I believe you understood. Being a loan of 10 lakhs taken from bank by issuing debentures of 12,50,000 as collateral security. I believe you understood. Write a note in relation to it. No entry is made in the books. No entry is made in the books of accounts of the company at the time of making issue of such debentures such debentures in the balance sheet the fact that in the balance sheet the fact that the debentures being issued as collateral security and and outstanding are shown under the respective liability under the respective liability. I believe you understood. Let us move ahead. Next topic is treatment of discount or loss on issue of debentures. The discount on issue of debentures is amortized over a period between the issuance of date, being the issuance date, and the redemption date. It should be written off in the following manner. Depending upon the terms of redemption, if the debentures are redeemable after a certain period of time, say at the end of 5 years, the total amount of discount should be written off equally throughout the life of the debenture, applying the straight line method. The main advantage of this method is that it spreads the burden of discount equally over the years. If the debentures are redeemable at different dates, the total amount of discount should be written off in the ratio of benefit derived from debenture loan in any particular year, applying the sum of years digit method. This method is suitable when the debentures are redeemed by unequal installment. The accounting entries would be as follows. Profit and loss account debit to discount on issue of debentures account, being the amount of discount on issue of debentures written off. Loss on issue of debenture is also a capital loss and should be written off in a similar manner as discount on debentures issued. In the balance sheet, both the items, discount and loss, are shown as non-current or current assets depending upon the period for which it has to be written off. I believe you understood. I believe you understood this. Let us move ahead. Illustration 11. HDC Limited issues 1,12% debentures of 100 each at 94 on 1st January 2017. Under the terms of the issue, the debentures are redeemable at the end of 5 years from the date of the issue. Calculate the amount of debentures to be written off in each of the 5 years. Do it once more. HDC Limited issues 1,12% debentures of 100 each at 94, issued at discount of 6 on 1st January. Under the terms of the issue, the debentures are redeemable at the end of 5 years from the date of the issue. Calculate the amount of discount to be written off at each of the 5 years. Solution. Solution. Total amount of discount comes to rupees 6 lakhs, rupees 6 into 1 lakh debentures. The amount of discount to be written off to be written off in each year is calculated as under calculated as under year year end debenture outstanding ratio ratio in which ratio in which discount to be written off discount to be written off amount of discount to be written off amount of discount to be written off first year total 5 years are there, second year, third year, fourth year and fifth year. Debenture outstanding 1 crore, second year it is 1 crore, third year it is 1 crore, fourth year it is 1 crore, fifth year it is 1 crore, equal, so it is 1 by 5, 1 by 5, 1 by 5, 1 by 5 and 1 by 5. Amount of discount to be written off 1/5 of 6 lakh, so 1,20,000. 1/5 of 6 lakh, so 1,20,000. Same 1/5 of 6 lakh, it is 1,20,000. 1/5 of 6 lakh, it is 1,20,000. 1/5 of 6 lakh, it is 1,20,000. Let us move ahead. Illustration 12. HDC Limited issues 2 lakh 12% debentures of 10 each at 9.4 on 1st January 2010. Under the terms of issue, 1/5 of the debenture annually redeemable by drawings. The first redemption occurring on 31st December 2010. Calculate the amount of discount to be written off from 2010 to 2014. Solution. Calculation of amount of discount to be written off at the year end for first year 2010, 2011, 2012, 2013 and 2014. Debentures outstanding, debentures outstanding before redemption, ratio of benefit derived, ratio of benefits derived, then amount of discount to be written off. 20 lakhs total in 5 years. So 2 lakhs multiplied by 10, 20 lakhs, 16 lakhs, 12 lakhs, 8 lakhs, 4 lakhs. Ratio 5, 4, 3, 2, 1. Total 15. 15. Amount of discount to be written off. So 5 by 15 of 1,20,000, which is 40,000. 4 by 15 of 1,20,000, which is 32,000. 3 by 15 of 1,20,000, it is 24,000. 2 by 15 of 1,20,000, it is 16,000. 1 by 15 of 1,20,000, it is 8,000. Total 1,20,000. Let us move ahead. Interest on debentures. Interest payable on coupon debenture is treated as a charge against profits of the company. Interest on debenture is paid periodically and is calculated at coupon rate on the nominal value of debentures. The company will pay interest net of tax of the debenture holder because the company is under obligation to deduct tax at source at the rates applicable under tax rules from time to time. The companies will deposit the tax so deducted with income tax authorities. Following accounting entries are to be recorded in this regard. For making interest due, interest account debited to debenture holders account. For making payment of interest and deduction of tax at source, debenture holders account debit to TDS payable to bank. For making payment of tax deducted at source, TDS payable to bank. For transferring interest to profit and loss account, profit and loss account debited to interest account. This was interest on debentures. Illustration 13. A company issued 12% debenture of the face value 10 lakhs at 10% discount on 1st of January 2017. Debenture interest after deducting tax at source at the rate 10% was payable on 30th June and 31st of December every year. All the debentures were to be redeemed after the expiry of 5-year period at 5% premium. Pass journal entries for accounting year 2017. Read the question once more. A company issued 12% debentures of face value 10 lakhs at 10% discount. The debenture interest was deducting TDS tax at source at the rate 10% payable on 30th June and 31st of December every year. At the debenture, all the debenture were redeemed after the expiry of 5-year period at 5% premium. Pass journal entries for accounting year 2017. Solution. Solution. Journal entries. Journal entry. Journal entries. Date, particulars, debit and credit. Date, particulars, debit and credit. Debit amount and credit amount. On 1st January 2017, entry would be bank account debited to 12% debentures, 9 lakhs to 12% debenture, 10 lakhs to premium, to premium on redemption of debenture, redemption of debenture account. Premium is 50,000, so it is 1,50,000. Discount on issue of debentures account debit. So bank account debit 9 lakhs, discount on issue of debenture account debit 1,50,000 to 12% debentures to premium on redemption of debentures being issue of debentures at discount redeemable at premium, redeemable at premium. Let us move ahead. 30th June 2017, debenture interest, debenture interest debit to debenture holders, to debenture holders, debenture holder 54,000 to TDS, that is tax deducted at source, tax deducted at source, it is 6,000, total 60,000. I believe you understood. For interest payable, for interest payable. Next, debenture holder, debenture holders account debit, TDS, tax deducted, tax deducted at source, debit to bank account, to bank account. Debenture holders 54,000, tax 6,000, bank 60,000 for payment of interest and TDS, for payment of interest and TDS. Next, 31st December 17, debenture interest, debenture interest debit to debenture holders, to debenture holders, to TDS, that is tax deducted at source, Debenture interest debit 60,000. Debenture holders 54,000 and 6,000 is TDS, that is 10%. Next is debenture holders account debit. Debenture holders account debit 54,000. Tax deducted at source. Tax deducted at source debit 6,000 to bank. To bank account 60,000 for payment of interest and tax. I believe you understood. For payment of interest and tax. I believe you understood. Next entry would be profit and loss account, P&L account debit, total that is 1,20,000 to debenture interest, to debenture interest account 1,20,000 for 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 transfer of debenture interest, for transfer of debenture interest to profit and loss account, to profit and loss account at the end of the year, at the end of the year. Next entry, profit and loss account debit 30,000 to discount or loss on issue of debentures account 30,000 for proportionate debenture discount and premium on redemption written off, that is 1,50,000 multiplied by 1 by 5, 30,000. I believe you understood. I believe you understood this. Let us move ahead. Example. Example. A Limited issued 10,000 10% debentures of rupee 100 each at par, payable in full, payable in full on application by 1st January, by 1st January. Application was received for 12,000 debentures, for 12,000 debentures Debentures were allotted on 5th January 5th January. Excess application money excess application money was refunded. Excess application money was refunded on the same date. On the same date. Pass necessary journal entries in the books of the company. In the books of the company. Solution. First entry, January 1st. Bank account debited to 10% debenture application account 12 lakhs. January 5, 10% debenture application debited 10 lakhs to 10% debenture 10 lakhs, and for the refund 10% debenture application debited 2 lakhs to bank 2 lakhs to bank account 2 lakhs. I believe you understood. This. Let us move ahead. Example. K Limited issued 2009% debentures of rupee 100 each at a discount of 4% payable rupee 30 on application and balance on allotment. Give necessary journal entries. Solution. Bank account debited to debenture application 60,000. Next entry, debenture application account debited to 9% debenture account 60,000. Next entry, debenture allotment account debited to 9% debentures 1,40,000, 1,32,000 and 8,000 will be debited as discount on issue of debentures. Next entry, bank account debited 1,32,000 to debenture allotment 1,32,000. I believe you understood till here. We are stopping here. Thank you.